Fed officials are agreeing that it's likely the rate hike thing is likely done.
Here we go. PMI numbers. Let's see what we got here.
It's an area that we can call a previous resistance or previous high. So if we get out of that, then we're going to have a fresh start.
It's going to be a lot of aggressive trending for the next 2 weeks, and then dead.
$20 seconds here to go. 15 seconds. Let's go ahead and roll our breaking news for PMI here today. And there you go, down to the fine details with our Christmas themed breaking news. Again, shout out to the producers. Here we go. PMI numbers. Let's see what we got here. Dollar index coming down here a little bit, but not a substantial move just yet. Let's go see if we can check the numbers and see if we did in fact get something of interest. There it is, 49.9 on the manufacturing prices, and PMI did in fact come down, 46.7, probably favorable to S&P, gold, etc., euro as well. Euro, by the way, tagging a support zone and finding potential support. We'll watch this candle. Dollar index coming down pretty hard here. Not a substantial move by any means, but a move nonetheless. Gold ticking slightly higher. And again, we're watching for the follow through here, because sometimes you get these news events and they have a delayed reaction, they have no reaction. It just depends how surprising the number is. And I would say that you kind of had some mixed. We have one green, one red. That should tell you something right off the bat. But you do have 46.7 on the manufacturing PMI, which was what the market was kind of looking for. Contraction in the economy right now is still kind of favorable for like equities, like indices, right? Because the idea being, if that is going to push the Fed off of the idea of rate hikes, but also maybe more importantly, even start to get closer to the discussion of rate cuts. So if inflation continues to come down and the economy is steady, but kind of cooling as well, that has the potential to be bullish for gold, bullish for S&P, and that's sort of what we're seeing so far. We had the latest PMI numbers, which did show some more contraction in the U.S. economy. And, you know, Frank, my trading colleague, which you probably know from some of the interactions we've had here on the show, he asked me a question. I want to ask that same question to you. Frank asked me, in terms of indices and risk on sentiment, do we want to see still cooling economic data? At what point do we not want to see cooling economic data, right? Because let's say that you are bullish on the S&P 500 or the Dow or the NASDAQ. If you want those things to go up, at what point do you want, because it seems a little confusing at first, why would you want slowing economic data if you're trying to see the stock market go up? But it's because, of course, the Fed. But at what point do you think, Kenzo, that bad news is truly bad news, and you know, that changes, right? Because this cooling PMI number is actually in some ways still good for stocks, but at what point does slowing economic data become bad? I hope that question makes sense. I know it was a lot.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Yes. Yeah, you're right. Sometimes it can be confusing because we do want to see the economy slow down, but not too much. Because if it goes too much, it means even the stock market won't perform very well. If the economy slows down, it means there is no people who are waking because now they're laying off jobs. So that is also very bad and might lead to recession where there is enough people who are not working, companies are so struggling. But we actually want medium rates, not really, if maybe we want the economy to go down, not really on the negative side, but on the middle side. Uh, it might confuse sometimes, but yeah, we don't really want it to be on the highest side. Like when it goes down, it's where maybe everyone is going to suffer. That way, even the stock market is going to suffer. We just want it to be on the medium side, you see.
Right,
So yeah,
exactly.
it might be confusing. It might be confusing sometimes, but we don't really want it to drop like too much.
Yeah, no, that's a really good point, and I have another follow-up question in regards to a very specific asset that, of course, everybody's interested in, which is gold. In terms of the PMI numbers here today, some people are pointing to the fact in the chat right now that gold is breaking out or seemingly trying to do so, and it does kind of make sense if you think about it. PMI, a measurement of the economy, slowing economic figures, that environment, generally speaking, very good for gold. And it's why I think, Kenzo, that gold is headed to go retest the all-time highs. But what do you think? I mean, clearly, again, PMI numbers having a positive impact on gold, slowing economic data, bullish gold. What do you think about gold right now? Are you in a trade? Are you looking to trade it? Do you think it's overdone? What do you think?
Yeah, I think gold can still push higher. Actually, I was still waiting for it to retest. Unfortunately, I was busy with other things and it retested here and now it's far. So maybe I will get it above there or maybe I can wait for another retest. But I think the more the economy is slowing down, now it's a good time to buy gold as a safe haven because we don't really like very weak economy. So we might see it push to the upside. Like as if I actually heard on the news, I was listening to the news, there is a chance that next year they might cut the rates. And that is also not really good, especially when the economy is not performing very well. So at the end of the day, it means things like gold, they can actually push higher.
Yeah, no, and I think, Kenzo, I've made this point on the show a few times, and in the podcast series that I joined for Market Pulse, we've talked about this topic many times, and I want to get your thoughts as well. I think next
Yes.
year, as we go into 2024, the bullish and bearish argument of this year has been very much focused on, they need to keep rate hikes going, and inflation's not going to go anywhere. And that was the battleground for the bulls and the bears. But now what I think is going to become the new battleground as we go into 2024 is the economy, are they going to rate cut? At some point, they are very likely to rate cut. That is the consensus. But the question is, are they going to rate cut because, to your point, the economy slows, and perhaps they rate cut because the economy is slowing too fast? Or are they going to rate cut because they can, right? Like there's a difference in there. If the economy holds out and stays steady and they rate cut just because they can do so, that's incredibly Goldilocks, perfect or a soft landing. Whereas if they cut because they need to, because the economy's starting to really slow down and unemployment spikes, those are two different rate cuts. Would you agree? I mean, those are two different scenarios entirely.
Yes, I think for now I can say they don't actually have a choice because they're trying to slow the inflation. At the same time, that hurts other economic activities. So they are forced to try to regenerate that movement in the market because if they cut, it means now other smaller businesses they can actually take loans. So circulation of money is gonna go back to a little bit normal. But if they just pause like that, it's also difficult for them because it's like they don't really support the economy. So
Sure.
now interest rates are very higher. So it's not easier for anyone just to take loans, to buy cars. So all those activities are a bit expensive now. So they have to. They are forced to. It's not like maybe they have any choice. If they have any choice, I think, yeah, I don't think currently they don't really have any choice. They just have to. If if economy keeps going down like this, they have to do something.
Yeah, and what I think is interesting, Kenzo, is to both of those scenarios, cutting because they have to or cutting because they can, both of those scenarios, they in some ways offer kind of a bullish environment for gold. Now, if you think about it, if they cut because they can, it means that inflation is cooling, the economy is okay, but that's going to lead to a weaker dollar in terms of economy cooling some way, and so that's good for gold. But if they cut because they have, and fear is very high, and recession possibilities, and inflation keeps going lower at beyond where they even wanted to, if that were to happen, that is incredibly bullish for gold. So it's almost like I see in both scenarios, as long as inflation doesn't start to tick higher again, gold looks really good. And so for me, I agree with your technical breakout there, or technical analysis there that you did. On my end, if we do,
on gold.
Yeah, I was going to say, like, this idea of a breakout, if you get the pullback, I think, to be completely honest, that anything underneath the all-time high right now is a decent possibility of being a nice, you look back in a couple months and it might be a really nice entry. So of course we'll see if that does in fact play out. Markets can change, but would you agree? I mean, is it really just, would gold be on your radar for the next few weeks, next few months? What do you think?
Yeah, from now, actually, the way I see it, from now on, I'm just waiting for a smaller breakout there because I missed it on the lowest side. So unfortunately, I'm not a swing trader, but if I was just going to hold it and forget. Maybe I was going to check it maybe next year, January or February, because there is enough evidence that there is enough push in the market as the dollar is losing some momentum. So one way or another, even if it doesn't really break some new records, but I think we still have enough room to push the upside. Where we are now, if we check on a daily time frame, it's an area that we can call a previous resistance or previous high. So if we get out of that, then we're going to have a fresh start. So there is a room actually for a nice buy there, or a nice new high.
Yeah, I was going to ask you, in terms of, while we're on the topic of USD stuff, what about euro? I mean, euro has really fallen apart here. Pound pairs, anything you're watching on the currency side?
Yes, I was also checking Euro USDs, GBP USDs, because they were moving very nice since we're no longer on that downtrend. Since last week, as the dollar starting to lose momentum, we saw them starting to gain some momentum, and I think that will happen. And I actually like this reversal, because where the market was, it was difficult for us to continue buying. So this reversal, obviously, it will give us a proper structure to continue pushing to the upside. Plus, we never had a proper support area, as this was a very new trend. So I think this reversal might end up creating a nice structure. So unfortunately now, we don't know if maybe the market will respect this area or it will push lower. But even if it keeps pushing lower a little bit, I don't think that will be sort of a downtrend or something. I think it will be just adjusting. At the end of the day, we might still see the market continue pushing up. So yeah, I'm actually bullish on Euro USD. GBP USD also, it was pushing up very nice. So yeah, we're actually, for the whole week, we were just buying gold, GBP USD, Euro USD, even GBP JPY, and also selling USD CAD. So it's been very nice.
I had a limit order on Euro Yen earlier that got triggered, so I'm currently nursing $3 almost in loss. So Friday.
Yeah, Euro Yen that you're watching. What about any other yen crosses? I know the Japanese yen is up a little bit today. Yep, up a little bit today, JXY. What do you think? I mentioned dollar yen, and I was thinking about you earlier. Any thoughts on dollar yen? Are we watching this one?
Well, I sold it and I got out of it. What was it, 47.86, 46.86 or something, somewhere that bottom that candle. And right now I'm just Nothing speaks to me, to be honest. Yeah, 46.86, something there. Yeah, so nothing speaks to me at the moment. It's low. It's not high. It's not high. I'm like, to me, like it's supposed to be week now. So I don't know. I'm confused.
Sure. Okay. Fair enough. And I guess now that we're speaking about a new month, right? We just joined into December. You're the seasonality guy. So what's seasonally of interest to you as we turn into a new month? And I guess, November ended up being a real interesting move across a lot of yen pairs. We saw indices rally. But what do you think about December? Any thoughts come to mind on it?
Seasonality is very great up until the Fed meeting. So everything is now going forward is just get into target, get out and get home. So we are, there's going to be a lot of, I wouldn't say crazy, but I would say quite aggressive trends. If they are not ended, they will end soon. So whatever targets you want to get hit, it's about time that you start considering the ramp up. So it's going to be a lot of aggressive trending for the next 2 weeks, and then dead.
And that is a good point for the newer traders who maybe this is your first Christmas as a trader. You should be very, very aware that right around December 20th beyond, the markets just get dead silent. And if you're trading in there, it's going to be very spready. It's going to be very hard to catch moves that follow through. So to Ivan's point, that is a public service announcement. Be very careful as you get closer into Christmas. Markets tend to get real quiet, and it makes sense. People are away from the desk and they're with their families. So also, Ivan, we've got, I believe Chandler's working on getting our feed here for us so we can watch Jerome Powell, which should be interesting. So we can see what he's got to say in whenever he does get speaking. In the meantime, we had a discussion just before you were coming on about gold. And gold is an incredibly interesting market right now, at least in my opinion, because we have this scenario where economic data, we had PMI numbers, yet again, more cooling economic data, and you see inflation coming down. And it does paint an interesting story for gold. I want to get your opinion on it. What do you think about gold right now? Obviously, for me, it's not like at a place I can buy it or anything, but it to me generally looks bullish. What do you think? Do you agree? Do you disagree? Do you have any opinions on it?
I always disagree with you. So whatever you do, I do opposite of.
That's just being smart.
As somebody said, was it Vincent said? Vincenzo says, I'm going to stop trading against you, Evan, and I'm going to trade it with you now. But I also want a deeper pullback on gold. But yeah, it's dollar weakness, it's gold strength, it is gold seasonality, it is the Indian wedding season. There is demand for physical gold going in. There is central banks buying gold. So higher highs, but it's difficult, the volatility short term.
Yeah, no, that's a good point. I mean, the volatility dropping, and I want to say, even though all conditions still point bullish, it gets tricky when it's already at the highs. And for me, it's like, if I'm going to enter this trade as a trader, my job is again to allocate money where it makes sense and when it makes sense to do so. So for me, I'm waiting for a pullback as well on gold. I think we're kind of stuck in this range. Either a break and retest would be of interest, or perhaps a pullback to this zone I might take as well. So an interesting candle, by the way, as we look at it. Big rejection here at this resistance around 2048. It'd be interesting to see how we react to that area. Ivan, also, Jerome Powell is set to speak here. I think we have the feed coming. Whenever he gets going, we'll pull it up on the screen. But is there anything that you're looking from Fed commentary at this point? We've seen, of course, a pause narrative that they're no longer likely to rate hike. But are you looking at anything from Fed officials, Jerome Powell or the likes right now?
Dovish, somewhere, and just acknowledging peaking inflation, that we are getting closer to target, and hoping that CPI is going to be inflation is going to be 2 point something next. Well, it's not going to say that, but he acknowledging that has peaked at least.
Yeah, and that's a point that I was going to come to you on as well. It is unlikely that Jerome Powell or any Fed official, well, actually, I take it back. Waller basically straight up said, like, oh, I think we might be able to cut soon. He came out and he was guns blazing. But someone like Jerome Powell, the chair, right, and the official statements are probably going to stay very far away from saying, we think we'll be able to cut at this point, right? The Fed does not want to unwind its own workings, right? If they start saying, yeah, we think we can cut by this point, what that's going to do is it's going to get markets to potentially swing back into the inflationary environment where people jump into stocks like crazy. And so they don't necessarily want to swing the other way completely. But I do agree with you. Any signs of dovishness are what the market is looking for. Any cooling on the, inflation is sticky components. I think that's really where markets are going to pay attention to. And this gold price is crazy on the screen right now. It just keeps going back and forth and back and forth. But I'm watching to see how this candle closes. This is a 4-hour chart. If you take a look at the 1 hour, look at this. I mean, it's trying. This is a 1 hour candle. We've got this is a new 1 hour candle. This is all in the last 2 minutes. That's a crazy move. And Jerome Powell, not yet at the stand, but we do have the feed set up for us, guys. It's Chandler will have it for us, but we'll pull it up once Jerome Powell actually takes the stand. Ivan, I do also want to say I have to jump off at 11:15. That's 13 minutes. So you might be the new Trader Nick in like 13 minutes, where you take over the stream completely. You're Nick with a mustache. That's an improvement. I can't grow a mustache.
You can't.
I can't. No. I have patchy beard. It's horrible. It's like my my weakness. I can't grow a beard. Can you grow a full blown beard?
Yeah.
Oh, that's awesome.
I am so fed up with it.
Oh yeah. I think I've heard that from people who do have it. It's like irritating. I only have to shave like every few days, and it's not that bad. So I'm lucky in one way, but everybody loves a good beard though, so it's worth probably the struggle.
It's all right. I feel sad for myself sometimes, but it's all right. It's all right.
Fair enough. Well, look at this gold price, Ivan. As we speak, looks like we got ourselves a little bit of a breakout so far. Watch how this candle closes. But is that dollar weakness specifically? Let's see.
Kind of.
Yeah. Look at gold. Gold is just it's really. I mean, it is a little dollar weakness, but it seems like it's also just gold outright bullishness.
Yeah, that's more than the dollar. More than the dollar one.
Well, the other thing too, Ivan, to point out, obviously the dollar index is heavily based around the euro, and the euro's getting killed. So that might be a little bit of it too. Like the euro's struggling, so that's propping up the dollar index relatively.
Mm-hmm.
They said that Fed officials are agreeing that it's likely the rate hike thing is likely done.
Okay, that's big news.
Yeah, that's nice to know.
Why isn't the dollar dropping more, Frank?
Because the markets are funny, and they make no sense sometimes.
Okay, fair enough. Ivan, I'm still putting you on the hot seat for euro dollar. You have to tell us now, because I did it. Now it's your turn. Euro dollar, bullish, bearish, kangarooish. Which one?
I just bought it.
Okay. I don't hate the buy.
Well, it's a scalp for Powell. Powell should be dovish. So, and the euro has fallen so much today, they should go back up again. Of course, that's what I believe. But no, I think it's a pretty good discount rate. But I wanted to buy there anyways, so it's kind of like, oh, I'm on the wrong chart. Sorry, bros. I wanted to buy there anyways, so it was kind of in the area. So to me, it's where I want to have it. So
Okay,
right.
fair enough.
108.4, 108.80, somewhere around there, in that direction.
Frank, what do you think about? Of course, we've got. It might be a feed coming? I can't tell. But what are you watching, Frank, in terms of as we go into this news here today? Dollar-focused currency pairs or indices, gold. What are you watching closest?
Dollar focused. Anything against the dollar. The higher it goes, the more I want to
Anything that
look
moves.
at shorting it. So I don't understand, or I don't really see why the dollar should rise after this, other than maybe it'll complete that move in that trend line. But I think I'm happy to be short dollar.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.